Hello there, my name is Thomas O'Regan and I'm a professional property investor here in Australia. Now, I wanted to tell you guys about lending options today. I want to talk about lending options. Now, when most people think about getting a loan, they think about getting a loan with a first tier lender, and they are the big brand names out there in the banking space. Think Commonwealth Bank, think NAB, think ANZ. That sort of stuff is what most people think when they think about getting a loan for a property or getting debt with a bank, right? That's who they think about. But if you want to grow a large property portfolio, there is a huge world of lending out there that goes far beyond the first tier lenders. Typically, first tier lenders are the most conservative lenders out there, typically. And if you want to build a large property portfolio, not only do you have to understand and be using first tier lenders, but you have to be using second tier lenders, third tier lenders. And if you want to really push your investment portfolio to its limits, you can even get private financing. Now, in this video, I just wanted to go into what is a third tier lender. Basically, most of the time, a third tier lender is a non-banking institution, so they're a non-deposit taking institution. So you can't actually have a bank account or put money into these lenders. All you can do is pay a loan monthly, weekly, fortnightly, however you want to pay it to these people. So typically that will come as a direct debit out of your account from whatever bank you're holding the money in to pay for the loan. Now, what's the downside of going with a third tier lender? Or I'll speak about a few of the downsides with going with a third tier lender. One, they're slower. Two, you're going to need a broker, you can't go directly with the bank most of the time. Most of the time you need a broker. Three, their interest rates are higher, so the loans are going to be more costly. And those are the main downsides with them. But what are the upsides? The upsides are when the bank says no, when the bank sends a no, typically the big four, there is still flexibility to get a loan or to push your property portfolio, to grow your asset base with these non-banking institutions, these third tier lenders. Why and how can they do this? Because the big four banks are governed by APRA, okay? So they have policy written and restrictions written by APRA because they're a deposit taking institution, and they have to follow those strict guidelines, meaning they can't take on too much risk. And that is where the third tier lender can help out, because the third tier lender does not operate under APRA, and they can do all of them do different things, but most of the time they can do things that the big four banks cannot, which is a good thing if you're keen or interested in growing your property portfolio. But obviously, as I said, it does come at a cost. And if you understand the benefit of investing, most of the time that cost is a few extra interest rate points or a few extra percentage points on your interest rate. And I mean, if you're a good investor, that shouldn't matter, okay? So hopefully this helped open your eyes. If the bank says no and you're looking to grow a large property portfolio, you can use a broker to push a little bit further and use these non-banking third tier lenders to get the job done. See you guys next time. Bye.